Welcome to Sum Zero. Today we have Monsoon Pabrai. Her surname requires no introduction. Obviously, we've had Monish, her father, on numerous Sum Zero webinars, but we're super excited to have Monsoon here. She has started her own fund called Drew Investments. Monsoon, do you want to maybe just quickly give kind of your history with value investing and kind of like a quick intro on your firm, and then we'll get into Amex, which is a big name that we're all familiar with. Love to hear your thesis on that. So let's start with
Yeah,
that.
of course. Thank you for having me. I think I've tuned in most of your webinars with my dad and Guy. Um, but yeah, I've been introduced to value investing from a young age, probably around the age 19. After college, I worked at a hedge fund called Dalton Investments. It's a more of an Asia focused, but like a global value fund in Los Angeles. That was really fun because they sent me to and from India for 2 years, every couple of
Oh
months.
wow,
Yeah, and I got to meet. And then I was there for 6 months straight. So I'd say I probably met 300 to 400 management teams um, before the age of 23. And then I started the fund, Drew Investments, in 2021. So we're at about 4.5 years.
that's
Uh,
exciting. Is
yeah,
is Drew is Drew kind of a long only or more long
yeah.
short global? What's the
Long only global value.
Got it? Very
Yeah,
cool.
yeah.
And I guess like in terms of your orientation, your investment philosophy, would you say it's like the same as your dad's, or are you more growth oriented, or you kind of like how would you kind of categorize your investing philosophy versus Guy Spire and your dad, given that you kind of grew up with them?
Yeah, I lean more Guy than my dad. But every now and then I'll really like something my dad picks and I'm enamored by it. But I would say I'm more Munger, where I would love to own a incredible business at a good price versus more traditional Graham, just value or deep value. And I think that's also just because modern investing, it's hard to find an incredible compounder at a really cheap price. So you just kind of have to accept what you can get. And then when catastrophe hits, then you can double down, I think.
Yeah,
Yeah.
especially when we're at like all-time highs with the
Yeah.
markets. I mean, getting that sort of deep value in a great business is even harder. So I totally hear what you're saying there. So let's start off with Amex. Maybe walk me through how you first like came across it. I mean, everyone knows what Amex is, but
Everyone knows.
as a potential investment, like were you screening for kind of long-term compounders, or what was the initial screen that
No,
that
I've loved Amex probably since I was a teenager as a company. So I mean, Buffett's owned it forever, right? He bought it with the what was it, the salad oil crisis. He sold it pretty quickly after, and then he bought it again in the early 90s, and that's when he's since then when he's held it for a long period of time. So I think anyone with even an inkling towards value investing would know about American Express. The difference is how it looks today is pretty different than how it used to look. So it's kind of fun talking about it and looking at it now because they've evolved. And then I think you emailed me that really fun question about how will they survive in the age of stable coins. And it's a, yeah, so I guess for American Express, I mean, the credit card companies are all incredible companies because they just take a piece of transaction of every single transaction we make. The joke amongst my friends is if we step out into New York City, it's $100 spent. And so that's $200 in Amex or Visa or MasterCard's pocket. That's it. So um, US spending, global spending is a trend that will continue forever. There's no way we're going to just stop spending. I don't see that happening. So you have that tailwind happening for all the credit card companies. The reason American Express is different from Visa and MasterCard is they handle the lending side and they also handle the card reward. So this was actually not on Sum Zero. This was on I think a Value Investor Club write up, my gosh, 9 years ago. And the author said 59% of all revenue goes towards um, rewards. So Emirates points, Hilton points, Coachella tickets, whatever. And that was, I mean, if you're an entrepreneur and a business operator, taking 60% of your spend and putting it back to your customer is an expensive um, payment, right? It's an expensive cost to continuously maintain. And I remember reading that and thinking, oh, there's no way that they can improve from there. And every year I check, it's now at like 71, 72%. It's climbed. So what they do is they kind of have that Costco mentality or that Amazon mentality where the customer comes first. And every time that they can pass on a portion of their revenue to their customer base, they will. Um, and they keep improving on it and modernizing with it and, whatever it is. So, and it's important because they charge the highest fees. And if you run a business and you're a merchant and 100 people show up and 30 of them demand to swipe with their Amex and they can't, I don't think you'll see a loss of volume if you don't offer American Express as a accepted credit card. But um, the case against Amex 10, 15 years ago was that you could show up to a restaurant and they would not take Amex, and you would have to have a Visa or MasterCard backup to swipe with. That's not the case anymore. I think it's at like 99% of touch points. Um,
Somehow they haven't gotten into Costco.
yeah, well, Costco's it's only Visa.
It's only Visa.
It's only or debit cards, but if you shop Costco online, which I do now because I don't have a car, uh, credit cards, which is
Can
fine.
you explain, like open loop versus, I guess,
Yeah.
closed loop? Like, why is it like is it part of your thesis that
Yeah.
you know like not having to rely on banks is a good thing, or maybe you can just explain kind of your thinking
Yeah.
there.
So, Visa and MasterCard are open loop where they are just the security, um, where they just provide, yeah, the security on the transactions that it goes through, without fraud or whatever, safely. The bank, like JP Morgan Chase or whichever bank will kind of underwrite the loan and also handle, um, the rewards, or someone else may come in and handle the rewards. It just kind of depends. So they all take a piece of the pie at whatever piece they can take. Even Apple Pay will come in and take a small piece for being a touchless system. Amex is different in that first of all, most of their cards you have to pay in full every month. Um, they don't take on um, what's it called? They handle all the rewards and they handle the full payment security and the lending. So they're not working with any bank there. They have some small tie-ups, but not significant. And so they're the closed loop model. I think that's a deep of it. But the reason why like the closed loop helps them is they get to pick who they lend to. And so what you see is that they have a more affluent customer base, in theory, more affluent than what Visa and MasterCard get with their billion users versus million users. Um, and so what happens is Amex Amex charges the higher fee on a majority of their cards. They give back 60, 70% to their customers because they can. You don't see Visa and MasterCard having that ability at all. And so what Visa and MasterCard rely on is having global touch points being accepted everywhere. And those are also just incredible businesses. And not to say that they're bad. I love actually every single credit card operator. I think most businesses in the world aren't as good as any of them. But Amex consistently trades at a discount, which I think is unfair because um, what we're seeing in the US is, and this actually came up as a question on my Some Zero post, was we're seeing a really high US consumer debt. And Um, Amex is probably more insulated to any risk of that unfolding than Visa or MasterCard. And that's just because of the affluent lifestyle that they attract for their cardholders and that they reward them with too. And because most of their cardholders have to pay in full every month. So it's a small balance they carry.
You know, I have an Amex myself, and I didn't even know that I had to. I mean, I do pay every month, but I didn't realize that was a requirement. That's
Yeah.
really interesting.
Yeah.
Um, in terms of the loyalty associated with Amex customers versus the other cards, like how would you compare them?
Yeah. So I think before Chase Sapphire Reserved and like Capital One Venture X, Amex was the king card to have. It was the one that rewarded you the most, gave you the best points, had the best transfers to whatever partners, whatnot. I'm I think it's smart that Chase has come out with Reserve. I'm actually I just got Amex Business for my um the platinum card for my business, but I've actually been a loyal Chase Sapphire Reserve because my spending is more towards food than flights. So Reserve is a competitive card. They've just increased their price, and Amex is coming up. I think in a few weeks they'll announce their new benefits and their new pricing. So what I really enjoy is um, that the competitors are coming out with cards to compete with Platinum because one, it'll make Platinum better, then it'll also make Reserve better, and it also justifies the higher pricing if every card or every major card or bank has an offering at a high tier. It's good. It's good competition and it's healthy, and it also justifies that people are willing to spend that much, almost $1,000 a year on credit card fees just to have the card to swipe it. It's nuts.
Do you think that's worth it?
Yeah. As a user,
Why yeah, as a user, why is that worth it?
well, we can go through your spending. Um, but yeah, so you have the Amex personal card.
I have the gold, which is like not expensive.
You have the go. You have the food one.
I,
Yeah, it's
I
four
don't think
times on food.
I have no idea, to be honest. I think at some point I may have selected to receive points on things like AWS expenses or like certain
Yeah.
technology because it's a business card, but I
Yeah.
don't remember offhand exactly. But I know that it's like it's either free or very inexpensive to have.
It's cheap. Yeah, it's a good
Yeah.
one. It's like two
But
or
I
three
don't
hundred dollars.
yeah, and so I
Yeah.
don't have the platinum one, but I've in my head, I've thought like, is it worth spending, the higher fee to have the higher tier card? And I've never done any like real like analysis on it, but I'm
If you done any
curious.
work, oh yeah. I've done a lot of work on it, but so one thing I like to do every year is I go through my spending on my credit card and I check what's the points I would get if I were to switch to any of the other major cards and how that translates over to like airline points or hotel points or whatnot. Just because it would make a difference for me what vacation I take that year or what benefit I get. Um, but I would say I do that more than most of my friends. But I will say, when I'm about to turn 30, every single friend of mine from college has either Amex Business Plat, Chase FI Reserve, or both. And most of
Hmm.
us are not married and don't have kids, and we're high spenders. Um, Metro area. So for us, it makes a lot of sense to just keep swiping. And we are seeing an increase in Gen Z and millennial credit card spending. I mean, I think that generation will go through and actually carry pretty heavy balances. Um, just because it's too expensive to buy a home right now. You're in a major metro area. Expense is just going to be food, dating, whatever it might be. So I think so I think spending for 22 to 35 is very high. And then I'm not sure. I think once you get into like having a family, then yeah, your Costco spending is going to go up. And Amex used to have the Costco tie-up that I think ended in what, 2015, 2016. And they switched to Visa. But that was actually a really good time to buy American Express stock and Costco stock because I think they both fell like 10, 20%. And it was not that big a part of their Amex's business. Yeah.
So I mean, right now, or at least in your report, you mentioned Amex is trading for roughly 22 times trailing. I don't know if that's still the case because I don't know where the stock is exactly today, but
Yeah.
um, what do you think is like a fair multiple for the name? What do you think is sort of a conservative growth rate for the name,
Yeah, I
given
mean,
competitive
yeah.
landscape?
Yeah, I mean growth rate it'd be like conservative would be high teens. What will probably happen is low 20s. Um, yeah, and I mean PE 22 is higher than I think would make sense for value investors to buy. I purchased it personally, like I think like 12, 13 times. And it was sitting there for years. Um, and in the pandemic, I remember my dad basically walked into my room and he told me American Express is 7.5, 7.5 times PE at like 7:30 in the morning. And then he just walked out of my room. And I, like woke up an hour later and I came down and I talked to him in the kitchen about it. Um, and it was just kind of fun. He basically, and that's when this is a year before I started the fund and we were just talking about it. But he just said, "What do you always say about American Express?" And I said, "Oh, like 60% of their revenue goes towards um, rewards, whatever it is, Hilton points, Emirates points." And he said, "Okay, so what happens in the pandemic when people stop traveling?" And I said, well, they're not going to stop swiping their card. They're going to keep shopping. They just won't spend on travel. And he said, yeah. He said, well, what happens to that 60%? And I was confused. I didn't understand what he was saying. And he clarified for me that 60% that they pay every year in rewards is technically a liability that they have to pay to their cardholders. And if people aren't traveling, that means they aren't redeeming their rewards. But they might still be spending on whatever they're spending at home. And that is what happened. People kept online shopping like maniacs through the pandemic. So we saw credit card spending increase, stay the same. But we saw travel redemptions kind of for business travel. Um, People were, doing staycations for a month or two wherever they were. But um, when that 60% liability does not need to be paid, it basically becomes float. So then what happened is Amex reinvested that aggressively and it paid off for them so well. After the actual best time to buy Amex, if we're looking at 2020 hindsight, was when Amex was 7.5 PE, like April, May of 2020. And it basically stayed at 12 or 13 times for like 3 or 4 years after. It just recently kind of moved up in price. So I would say like this is not a discounted thing right now where it would make sense for everyone to purchase American Express, but it's such an incredible asset. I think it's good to own. And I think it's something that you basically have to just keep an eye on and wait for another scandal to hit for you to buy it again. But I would say like fair price is probably 25 to 30 times. And 22 is not discounted enough to, make a big allocation right now. But I think it's something that everyone should have in their like retirement account.
I mean, you wouldn't sell it unless you saw
Yeah.
like a total change in the competitive landscape. So what
Could never sell it.
you could never sell, yeah. But I mean,
Yeah.
on the question of stablecoins, uh, obviously there's a lot of like the rewards aspects and all these other. But at the end of the day, it's a 2.5% fee or whatever. Maybe it's 3%. I don't know the exact rate, but if there's an alternative where people can transfer or take payment for a much lower fee, like why wouldn't the merchants do that? And so
Yeah.
how does that fit into the thesis here is kind of the big question.
So eventually they will. Eventually, every single credit card will come down in the percentages that they take. And that's just because it's the exact same thing that happened to all the brokerages. When Robinhood came on, they offered free trading and no one else was matching it. But now basically every broker matches free or close to free trading because they have to, because it's the competition. So stable coins right now, I think are really good for non-US people that want to hold, you know, US dollar in like a high inflation environment or whatever the case is. If you're like sending money back to your family in another country, then stablecoin is a great replacement for like Western Union, or like another low, just like a same day cash transfer. The thing that stablecoins can't do yet because it's so fast and so quick, is I don't think they can replace the merchant customer relationship because it's two unknown parties. Um, so like I think the fraud protection with American Express and Visa and MasterCard, Capital One, you can't beat that right now with the stable coin. Once you can do that, then I think what will happen is once it becomes widely adopted, then the credit card companies will have to offer something comparable to compete. They will, without a doubt. Um, and we're seeing it with the buy now, pay later plans. Chase and Amex offered internally on their platform. They're like, hey, you can do like a fixed low payment on like a big purchase or something similar because Klarna and Affirm are starting to compete and are like, they're starting to show up as payment options that are available for merchants. I think there was a fun statistics. Coachella, 60% of those tickets were purchased through Affirm or Klarna. It's a $400 ticket.
Yeah, it makes me wonder what those folks are thinking, like
Yeah.
going to spending that kind of money on an installment plan.
Yeah.
That's kind of mind-boggling. Um, what's your take on sort of this, like the timeline around how their business might evolve? So buy now, pay later. I'm a little bit of a skeptic of that entire business model. Like, I mean, it's kind of a novelty to me, but I'm not. I don't think it like fundamentally changes the Amex business model or the credit card
No,
business model.
no.
Uh, the, uh, the risk of an alternative to the card, that's a much, much, much lower transaction fee. Like that is a real risk, but I have no idea like what adoption might look like from,
Yeah.
like, is that something that happens 5 years from now or 10 years from now, or like, I don't think it's 2 years from now. Cause I do think that merchants right now are not set up for, you know, taking like crypto payments on in
No.
mass, right? Like they're not set up for that. But I don't know if like in 5 years they will be.
Yeah.
Um, or and so yeah, I'm just curious if you have any thoughts
Thoughts?
on
Yeah.
how the adoption curve might look, and then the question is like, what is the reaction function of the credit card companies? Like,
Yeah.
do they cut their transaction fees but make up for it through something else? If so, what's that other thing? Is Amex better insulated because they are a lender as well? Like, what's the, you mentioned they don't allow people to like not pay on time. They have kind of a higher credit quality customer,
Yeah.
but maybe they sort of increase the scale of their lending business somehow. Like, I don't know, like, and start monetizing that in a way that they haven't been. But I'm curious what you've thought about in terms of other levers they can pull to
Yeah.
diversify the business a little bit.
Yeah. So they will definitely, they basically do increase their lending whenever they can, small, whatever it is. And they did in the pandemic, but, um, okay, so for stable coins, I think so every now and then I get an email from someone who wants to invest that says, "Do you accept USDT?" And I tell them, "No, we don't. We only accept USD because we have to do KYC. We have to check our clients. We have to know who the heck is investing and do a whole bunch of background." And um, I think you basically kind of need something similar for the credit card companies, not entirely. So, I think they are probably already working on it, and already thinking about it. So the most similar use case to this would probably be Venmo. Venmo, you could send money right away to your friends cash without, doing a bank payment to bank payment, connection. And for a long time, the banks did not respond to it. And then pretty much overnight, they just came out with Zelle. And so now you can, from your bank, send money to someone else's bank account through Zelle, and it's like a Venmo competitor. And so it would be, I mean, the technology that the stable coins are on is good technology. And they can bring it into their network, and I think they are working on it. They're already using, I mean, AI to kind of check for fraud and whatever kind of risk they can. So I think because all the credit card companies already have the merchants and the customers and all the touch points, bringing on any new tech is easy. It's not complicated, but I think until they have to, they won't. They're going to enjoy their 2 to 3% fees because they can. But I think once adoption becomes wider, then I think they'll have to respond. And they'll
What are
come
your
up with it overnight. Like it'll come
yeah?
up quickly.
What's your thought on management? Yes, this is like a softer question,
Oh
but
yeah.
yeah, just I don't know if you have any qualitative thoughts on the C-suite there.
No, it doesn't matter who runs it. It's so the moat is so strong that it really doesn't matter. I think the only thing you want is someone who's aggressive in acquiring new merchants and expanding, especially American Express outside the US. But I think you also want someone who's conservative on their lending and like sticks to that affluent lifestyle customer base.
So when you
Very
kind of you mentioned earlier like 2020 low 20s growth, is a lot of that hinged on international expansion? Like where is that coming
no,
from?
just consumer spending, just spending increasing. It's nuts how many times I swipe my card. Like I'm trying so hard to not spend every day and I can't. And I see it with all my friends. We always have conversations on how do we spend less. Like you're just there's going to be no reduction in consumer spending. People will become unemployed. You could see jobs being lost and people will continue to spend. If you study lending from the great financial crisis, people maintained their credit cards and just kept spending the minimum. You might see people close their like pay off their Amex, close it, and then move to Chase and MasterCard and stay there. But um I think for the most part, people like being loyal members of American Express and staying on. Every time you call, they'll pick up. They'll say, "Thank you for being like a value member for 20 years, 25 years." They always thank you. They remind you.
Yeah, and so like you're not particularly concerned about like consumer debt going above a certain threshold.
I am worried about it for the US. I'm not worried about it for Amex.
Okay,
Yeah,
that's interesting.
yeah.
Um,
Amex will be fine.
yeah.
Yeah.
Um, and is there is there I guess at what threshold would you consider selling? I mean, I've
Oh,
had this conversation with your dad about like, long-term compounders where he's been like, well, it would take a lot for me to want to sell a great company. Like,
yeah.
maybe the multiple is 10 points higher than its historical average, but because it's a great company and within a couple of years, it's going to grow into that multiple, even if it's a higher multiple. But is there kind of an earnings multiple where you would sort of take pause and be like, wow, Amex is at 40 times. I'm going to sell.
Oh, not 40. No, I don't think there's a number I would sell at, but there would be numbers I would just be surprised it hits. Like that would probably be like 50, 60, 70. I don't ever see it hitting something nuts like a tech company hitting
Yeah.
100. But I also don't know if I would sell at that high of a valuation either. I just
It's
definitely would
inter-
not
it,
buy
yeah.
more. Yeah,
It's interesting that, like to me, like there's some companies like Costco, for example, incredible business,
you can't
but
sell.
just very expensive. It's like hard to underwrite,
Yeah.
you
And
know.
I get that and I own Costco in the funds and I've had clients tell me it's at a PE of 60, grows 6% a year. Why do you own it? And I tell them it's because it's a cockroach. It can survive a nuclear war. And we're definitely not
Yeah.
going to buy more at this valuation, but we're not going to sell. We'll sell at a higher valuation, but ideally we never sell. And it's the exact same thing that Amex does, that Costco does, is that they pass every ounce of saving to the customer that they can. And it's so rare to find moats and business leaders who believe in doing that. Everyone wants to take an extra piece for themselves. Nobody wants to give a piece back to the customer to keep them in the business and keep them loyal. It's incredible
Yeah.
how simple that idea is and how rare it is to find.
So by that logic, are you also an owner or fan of Amazon?
You know, I am a fan of Amazon, but I don't own it.
Yeah.
I'm a heavy
You-
shopper. I'm a heavy customer.
You're a
So
heavy customer. Yeah, you're like,
yeah,
yeah. Um, no, no, I get it. I mean, Amazon, it's not quite apples to apples because it is at a significant premium to Amex. But at the same time, they go out of their way to,
yeah,
make the customer happy. So, but I no, I think that point about, the rewards, and customer loyalty is a really simple but very, very important part of the thesis that some people like lose when
yeah.
they focus on
And
other things.
it's so simple and it increases like I mean every year. I'm like literally I'll look at Amex once a year and I'll just always check what percent are they giving back in member rewards. And I think 2024 is when it crossed 70%. I was like, I didn't think they could keep going and they keep going. It's
Yeah.
remarkable.
Well, there's an upper limit to how much they can give back, obviously.
Yes,
So,
there is a limit. Yeah. There is.
so let's now I know you posted a bunch of stuff recently, and I was reading your BYD write up. You've written about TSMC, and then some like which of I mean, I'm just curious if there's any other name that you want to like go over
Talk about?
quickly.
Yeah.
Which one?
That I've posted?
Yeah, do you want to do BYD? I don't
Yeah,
know if
let's
that
do
one.
BYD. BYD is fun.
I,
It's
I I think BYD is fun. But yeah, I'll let you kind of give us your take on it.
Yeah. Okay, so I mean, BYD is essentially right now it's a EV company based in China. Um, it's kind of considered a Tesla competitor. They have more offerings than just their EV, so they have a few more business lines, but I would say it's if you're going to pick one winner in EV vehicles in the world, it would be BYD. And the reason is one, they and I talked about it in the note, but um, it's the lowest cost producer of electric vehicles in the world. So they're the biggest cost for an EV is the battery. And BYD before they made cars, they were making batteries. And I mean, Wang Chuan, I just call him Wang. Wang is just hyper about continuously bringing down the cost and continuous about entering new markets. So BYD is a little also famous in the value investing community because Lilu had invested in 2002 and he brought it to Berkshire. Munger loved BYD, and I think they convinced Buffett to purchase it. And I actually met Wang in Omaha in 2016, and I forgot I had met him until this past weekend. I found a quick photo and I tweeted it because I was like, oh my God, it's so cool. It's him. Um, but yeah, so basically they are the lowest cost producer of electric vehicles because of their history in batteries. They continue to remain being the lowest cost producer, and they're basically winning in EV in Europe. Um, when I go to India, the hotels will email me what car do you want to be picked up in, and I always pick a BYD. They're not in the US except for their buses, so Americans aren't used to the name or maybe haven't seen the name as much as the value investing community has. Um, and
So let's quantify the lowest cost producer because in
let's
the
do it.
U.S., Tesla is basically the low cost producer of EVs. You saw when Ford released the F-150 Lightning, it ended up being like 80, $90,000 for a pickup truck, which is crazy. And but you can buy a Model 3 for 30 something, 30 to 40K, whatever it is. Um, yeah, just if you can maybe quantify like what BYDs go
And
for and what the similar
10,000.
car would cost.
It's 10,000. Their cheapest car is $10,000.
Got it.
Yeah. They
So
don't
are
have
we
any
talking
car that's new in the US that's
yeah,
$10,000. Yeah.
and that $10,000 car would be like a four-door sedan?
Yeah.
Like what size car are we talking about?
You'd have
Like
to, it would be like a very, let me see this. Hold on.
like a Toyota Corolla, kind of like a
Yeah,
small
I would say it's a super entry level car. But you basically, I mean, it's a, yeah, it's a four-door car. It's called a Seagull. It's tiny. It looks like a small Nissan Leaf.
Got
for
it.
Americans. Yeah.
So like, but if you were to spend like, let's say $30,000 on a BYD, would that get you kind of a
You
full
get a
size
nicer,
car?
yeah, you get a nicer car. Yeah. Um, but it's so you know the Ambani family in India?
Yeah, of course, of course.
So Dhirubhai Ambani, who created Reliance, he used to say, when you offer a product, you should offer it at the price of tap water. So I think this is the case for everything outside the US, is that you have customers that are really sensitive, who are price sensitive. And so if you want mass adoption, you have to offer it at a cheap price. So Tata has like a nano car. It's kind of similar for BYD has a low offering for people, a cheap, like a, and I like that a lot about the world outside the US. Um, you actually see it in every sector. So, for example, in the US, like Rihanna dropped a makeup line called Fenty, and it's like $40, $50 a unit of makeup. Katrina Kaif in Bollywood, in India, dropped a makeup line that's the same price as drugstore makeup. So and it's celebrity makeup, which in the US would be priced high, but outside the US, you have to price very cheaply to get mass adoption. And I think that actually helps regulators, push for EV adoption if you're offering it at a really low price. And Trump did this with Elon. He was sitting in the White House lawn and he was reading off the prices of all of Tesla's offerings. I don't know if you saw that. It was a few months ago.
No,
It was kind of
no, I didn't.
funny. We should find a photo of it. But he basically had like a sheet with like the Model 3 price. He goes, it's offered very cheap at 30 something thousand. But that's actually not cheap for the average American.
Oh, I
Um,
agree. I completely agree. Yeah,
yeah,
I
and
mean,
it's a little out of touch, but 10,000 is a more affordable car for an American. It's not, I mean, it would have to be a used car, but to have a brand new EV vehicle in China for $10,000 is amazing.
right.
And you,
Um,
you just you can't beat and you can't beat that. You have someone
and,
who's to bring that to the masses. It's pretty.
and the other interesting thing about BYD is that it's, it trades like a car company, like, very, very
Yeah.
reasonable multiple. Um, but I guess, the question is like, are people gonna assign it a premium multiple, or you just hope that it keeps its multiple, but earnings just keep growing, and that's where you get your
Yeah.
information from.
Yeah. I think really it's just a growing company. If the multiple expands, that's great for us. If it doesn't, it's fine. It's cheap enough where it's okay. Um, and what will happen is, I mean, the thing is that companies outside the US don't should not get and typically don't get the same premiums we see in the US. So Tesla really isn't a car company, it's a tech company. And I think once you think of it that way, then valuations make a little bit more sense. BYD like trades like an OEM, like maybe a little bit too cheap, but it is in China, so I understand why it gets that valuation. But I think they're just going to do really well on earnings, and they're going to expand, and it'll be great for BYD
So
and
the
for
thing
China.
about the thing about Tesla's valuation is that so much of it hinges on autonomy.
Yeah,
Like the entire robo-taxi thesis and, like the FSD, like
yeah,
all of that is autonomy. And so if you took that away from Tesla, it would trade like an OEM or
yeah, it would.
so that, like, does BYD have its own autonomy efforts, and where do those stand? I'm just curious if like they could make the same argument that, hey, like we're gonna, not only do we have the low cost EVs, but we have the best, models that
Autonomous.
these
Yeah.
cars drive, and we could, play the same playbook that Tesla has with robo taxis and all of that.
So they have autonomous. And I think they are working on it or it's already developed. I forgot what it's called. I cannot recall what it's called, but it's different from FSD. And I think there's like a couple articles comparing them, but I need to go sit in a BYD and see how the autonomous system works just to really compare it. Because we have Tesla in the States and it's easy to see how, I mean, FSD is incredible on Tesla. It's pretty safe. And especially with like Waymo, Um, like I don't have kids, but when I have kids, I'd probably feel more comfortable putting them in a robo taxi than a taxi with a driver, a human driver. Just
Yeah,
constantly
5 years
and
out, I think
yeah,
that's right. Yeah.
yeah. I think that like to me that makes total sense. But and I know BYD is working on it, and they could get that valuation if that comes. But in general, what I've noticed is Chinese companies trade at a discount to their American counterparts. Always.
Yeah, always, yeah.
That's just
So,
always
and
the case.
let's talk about the tariff situation,
Yes.
in terms of how that impacts BYD. Just,
Yeah. They're
you know,
totally fine. Yeah. So they kind of benefit from the tariff situation because one, they don't sell anything to the US except for their buses. If they want to come around that and enter the US, they could come in through Canada or Mexico and kind of bypass whatever tariffs might be imposed. But what they, and I don't think they're actually too fixated on selling in the US. I think what we're seeing is um, other markets, non-Chinese, non-American markets, they will basically beat out Tesla because of the tariffs. Because like that, those economies or those governments will, elect to take the Chinese product that's cheaper, that gives EV to their customers at a lower price than, exporting a Tesla in. So I think what we're going to see is like Vietnam, Indonesia, these kinds of countries that surround China or neighbors to China will do really well for BYD. And BYD is winning in Europe right now.
what's the Europe penetration look like? And just if you can speak to growth rates, broadly, what's kind
Uh,
of the general growth rate right now?
yeah, so BYD Europe penetration, I don't actually have the percentage off the top of my head, but I do know that they're beating. Okay, just really quickly look this up. So July 2025, BYD sold 15,000 cars in Europe and Tesla sold 8,000. So there's just penetration is still low.
Oh,
Um,
yeah.
yeah, but if you're gonna have a winner, it's gonna be I mean, Europe's economy isn't great. They're not, maybe they'll want, like the wealthy will pick a Tesla over BYD, but if you're really trying to adopt EVs and you don't have a local producer, you're gonna bring in the one that's cheaper. And I
Yeah.
think Europe is not gonna be happy with the US's tariff, so I don't think they're gonna favor China, but I think they'll let China come in.
And you've got a $200 or Hong Kong dollar target price on
Yeah.
BYD. I guess, what do you have baked into that? Um,
Yeah, that's just growth. Like that's just um selling more cars in more territories. Um and I really don't think they're going to have large net profit margin expansion, but they will have volume growth. So that's kind of how I see it going, and I think it's over like 2 to 4 years. I can see it hitting, if not faster. And part of that probably is a little bit of um earnings or multiple expansion. That might happen. I just don't count on it.
are they?
I don't like to lean on multiple expansion as my thesis. I like to lean on like earnings growth.
Yeah.
Uh, but what will happen is inevitably there will be some multiple expansion as autonomous becomes part of the thesis. Yeah.
Do they have a humanoid robot arm as well?
I think they do, yeah. I think they
Do
do.
they really?
I think so. I don't know. I mean, the Wang is always working on new things in new markets pretty aggressively. But he's always I think what if he's smart, which he is he'll have some small division working on it. He'll allocate some dollars to it, and then just see what works out.
Yeah.
Yeah,
And then from a corporate governance standpoint, being Chinese, like, do you have any concerns?
always. I always have some concerns. So I think what I've learned is because I got burned by Alibaba and Tencent, is if you're worried about regulation or any kind of risk, but it's an incredible company, just size it down. Just don't make it a full bet. Like, just don't do a 10%, 20% big bet on a company with risk you don't understand very well. And I think if you take a Western framework and apply it to something like BYD, you're gonna get hosed. You have to come in with a Eastern or a Chinese viewpoint when you look at it. That was kind of
Which
my
means, when you mean,
you
when you say
need to go
Eastern,
hang out. You need to go hang out there and hang out with locals and get a real feel for just kind of the way people think there and the regulator thinks. And the locals will tell you. You'll get a real I feel like for India, for example, it's really easy for me to understand exactly what the Indian regulator is thinking. It doesn't make sense, but I know what they're thinking. It's the same way with the Chinese regulator. If you spend enough time in China or you hang out with enough people who are from there, they'll pretty much explain it to you. And you just can't come in with an American framework to something like this.
and so what does the Chinese regulator think about BYD? Or what
They
have
like
you learned
BYD.
about
I think so. Like the Chinese regulator cares about three things. They care about is it good for the people? Is it good for national interest? And is it good for GDP? And BYD is good for all three. I mean, it's really because they came out with a car that's so cheap, that I think that the government is probably really happy with what they're doing. But I would say the Chinese government has short-term memory, and will, stop operation or, you know, really penalize a company probably beyond what's reasonable for our framework, if they mess up. And the thing is that any company operating in China knows that. And I think especially with what happened with Alibaba and Jack Ma, they're, really aware of it.
Yeah, you
Yeah.
see, you see these CEOs living in fear.
Yeah.
Although, I mean, Baba has bounced back. I
It's
feel
bounced
like,
back. And it's an incredible business. And that's the thing, like Baba is an incredible business. If you were patient enough and could hold it on through all that pain, I think kudos to you. But I think in terms of like the regulatory framework, you just have to come at it with a Chinese framework. You can't come at
yeah,
it with
yeah, yeah. So,
American.
so by that logic, do you like Pinduoduo? I mean, that
Oh
same.
yeah,
It's
Lilu just bought a huge stake. It's on my list to seriously look at it. I don't have a take right now, but it's on the list. Yeah.
um,
What do you
yeah.
think about it?
Well, I mean, I like companies like, kind of like, to your point, like they're selling a service at a price point that is just, you cannot ignore.
Yeah.
And for, the mass market, like that's really important. I mean, one of the reasons I'm very bullish on Meta's pursuit of wearables is that their entire philosophy around it is to bring it to a price point that even a blue collar person
Yeah.
could afford it, right? Like, if you think about the calculus of, buying smart glasses, well, if it turns out the smart glass is like only $50 more than the dumb glass, well, like obviously you're going to buy the smart glass. I mean,
Yeah.
no matter what your income level is, one product is giving you like access to the internet, the other one is not, and it's
Yeah.
it's like the value proposition is so obvious. It was the same thing with Costco. Like, it's like today, my nanny brought home a loaf of bread from Costco, and it was the same price as the one sold at Whole Foods, except it was twice the size.
Yeah.
And it was like, and it tastes better, and like, so you don't need to be a genius to know that they're onto something.
Yeah.
Um, and so then it's just a question of like, well, what multiple do you assign that business, and is it reasonably valued or not? But at least that there is a value proposition that isn't going away. Like, no matter what happens in the world of technology, and technology is changing extremely rapidly, but like, people will never get sick of like receiving more for less, is maybe one way to
Yes.
think about it, right? Like, nobody's going to get tired of shopping at Amazon if
No.
if Amazon is effectively giving you like, the best deal that I mean, this is why like Temu and Shine have taken off, right?
They do
Like,
so well. Yeah.
yeah,
Even
it's
my mom, she just texted me. She checked into her hotel and she said Amex gave me like this benefit and this benefit, and then I got late checkout another benefit. And then she said it's so funny how it doesn't matter how much money you have, but any little like reward or small amount you get back feels so good. Um,
well, when it's unexpected,
It's so
You,
fun, yeah.
yeah,
No, but I think Meta is with the glasses, they're being so smart. They're gonna do so well. I went on a every year I go on a hike with like 15 to 20 of my closest friends, and on the last hike, one of the girls had the
I'm
Ray-Bans
Harry.
Meta glasses, and the quality was so good, and we didn't have to take out our phone, and
Yeah,
everyone was kind of like dancing in front of the camera in front of her glasses, and it actually created a more natural experience than like taking out your camera and taking a photo. It's just on your face, and I was pretty amazed, and they looked exactly like my pair of glasses. They didn't look weird at all.
exactly. It's the
Yeah,
same
it's
thing.
so
They're
good.
going to come out. The next gen will probably be released in the next month. So
Yeah,
it's like every year they're just iterating over the same thing. It's getting smarter and better, and I think those things ultimately add up. I just want to, before we close, there's a couple questions here.
yeah, yeah.
I didn't even notice these, but from Aditya Shah, what are your thoughts on the recent Plaid AF hike? And more thematically, how are you thinking about competition for emerging corporate expense management players like Ramp? I get so many Ramp ads, but yeah,
It
any
not.
thoughts?
Um, no, I think the American Express annual fee hike is honestly it's just a response to Chase Sapphire. Basically, if Amex wanted to charge $2,000 a year on their platinum, they could. They would just lose a bunch of people. But the people that are willing to pay 2,000 are the ones that they want to have, right? The ones that are just swiping left and right. They're spending over 100K a year easily per authorized user on their card. But they also want volume, so they price accordingly and then they offer benefits accordingly. So the thing is that it's definitely coming up in the next few weeks. I'm excited for it. I think people will stay. I think people who leave are the ones who they want to leave. Or they'll maybe go to Chase Sapphire or they'll go to another card and it's fine. But I think 90% of the users will stay on with the price hike easily. I don't even think they'll think about it. And that's just how resilient their um, customer base is. And they're honestly only increasing because Chase increased and they can now. And I think they like being the most expensive card. I think they really enjoy charging the highest annual fee. And they love
Any,
it would be strange to live in a world where Chase Sapphire Reserve charges more than the Amex Platinum.
any
There's no way
thoughts on
with that. On Ramp? No.
yeah?
I have no. Well, the thing is that I like Ramp, I mean, I have the build card for my rent. That's probably something I know more about. But yeah, I think more credit cards entering the scene, yes, they will take share away, but spending is going up, so like the TAM is increasing. And so if everyone's taking a new piece of the pie, that's fine. And then
Yeah.
what can happen is all these guys can learn, all the current players can learn from the new players who are taking share and just implement something really similar. Not worried
Uh,
about.
Potential for BYD entering the US. Is that even remotely likely?
No, I don't. I think under this administration, it probably won't happen. Um, Maybe the next one. We'll see. But BYD doesn't need to enter the US to be a great company. That's how I feel. It's actually a really nice non-US bet just to
I
have.
think the more interesting one though is BYD entering India. So
Yes,
that must be like a huge opportunity for them, right? I mean,
it is. Well, the thing is that, I mean, India is even more of a value
yeah,
um, market than, and I mean, I go every year for a few weeks and I really see it, and I also see development happening, but the, I mean, it's a two-wheeler economy. It's not a car economy. So maybe like BYD motorcycles or something. And there are EV motorcycles coming in, but it's how do you charge? And there's all these logistical issues in India. So I don't know if in the next 1 or 2 years I see BYD being a big player in India, but maybe in 5 to 10. Maybe.
yeah.
Yeah.
Um, uh, Monsoon, I think we covered a lot here. So let's do this again sometime. I enjoy the conversation.
Of course.
And I like your kind of more thematic approach to a lot of your
Thank
business.
you. Yes.
Kind of there's like oftentimes like a simple narrative is better than kind of a deep dive, ultra detailed look
I
at.
think so. I think numbers basically give you bottom side protection. You don't want to lose money. So I think looking at valuation and numbers is important for not losing money. But I think on where you see growth or where you're going to make your money is way more thematic than
Matt.
oh, they're expanding their margins by this much and it's going to do whatever with the story. It's like, no, you're going to make a ton of money if your story is correct. And you're not, and you don't want to, you don't want to lose money. But you also want to make a lot of money. And I think it really comes down to the story.
Yeah, that's an interesting point of view. Awesome. Monsoon, thanks again for joining us.
See
We'll certainly be in touch and looking forward to more of these.
you soon.
All
Thanks.
right. Thanks, Monsoon.